Securities and investment advice.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
Good morning. Thank you for tuning in. You are listening to Money in the Morning with Mitch Goldberg. We thank you here at 103.9 FM LI News Radio for joining us. This is going to be a quick-paced show today. We have a lot to squeeze in. There is so much going on. I love this stuff. We're going to nerd out for a couple of minutes first. Okay, so right off the bat, we should just jump right in. The major averages are holding steady in the pre-markets. We've had a couple of up days, 4 up days for the Dow. That was Wednesday, Thursday, Friday, Monday. The Dow is indicated in the futures market to be up 4 points on the open. S&P 4 points as well in the open. And NASDAQ up 23 points in the open. These are very subtle, tiny, fractional amounts, but nevertheless, you know, green is green, and we'll take it. I don't really make a big fuss either way, to tell you the truth. This doesn't mean in any way, shape, or form how the major averages will do for the day at 4 o'clock on the close today. But like I always say, if I was to do this show at 11 a.m. or 2 p.m., I would give you a quick update on where the major averages are. The oil, West Texas, down 72 cents at 79.73. So a little bit under 80. I think 80 is an important mark. West Texas, that's the oil we go by, that we source domestically and in the Gulf and offshore on the coast. That is West Texas. It's been in a range of about 72 to 82. So almost 80 at the upper end of its range. We'll see how it goes. We're going to start the summer driving season soon when gasoline usage goes up. We just really have to see. It's tough to say what it's going to do, but with China opening up, that could put more pressure on upward prices of oil, but it's also widely expected that the U.S. economy is going to slow down. We're going to talk about that because we've been hearing the U.S. economy is going to slow down, possibly tip into recession for months now, for quarters now. Hasn't happened yet. The 10-year yield is 3.94%. That's the key yield that we follow the most. So it was over 4% last week, backing off. But yields across the Treasury bond spectrum have actually ticked down just a little bit. That means bond prices are going up a little bit. So investors were attracted to the lower bond prices and they thought they were a buy. So there was some nibbling in the bond market. And I don't blame them. You're getting 5% in 4 month, 5 month, 6 month, and even 1 year T-bills. That's a pretty good deal. Plus, when you get interest from a T-bill, you don't have to pay the state income tax on it. You just pay the federal tax. So it's even more attractive in a taxable account if you're looking for a smart, safe place to be. And, I can say that because T-bills are the risk-free rate of return. And they're even more attractive in an IRA where it's tax-deferred. So you're getting 5% in a tax-deferred account. For a lot of you, that is going to be like 7 or 8%, in some cases even more if you're a high-income person. Okay, so let's move on and talk about the really important things here. I want to nerd out a little bit. We've got some big things going on. So, excuse me. I appreciate Long Island putting up with my stuffy nose and chronic cough like the last 2 months. It happens to me every winter. All right, first of all, big things going on. The Federal Reserve Chairman Jerome Powell speaks in his semi-annual appearance in front of Congress. It's a 2-day event. The first day he speaks before the Senate Banking Committee. That's today. Tomorrow he'll speak before the House Financial Services Committee. And more or less, he says the same thing both days. The only difference is the questions that could come up. it's very, the House doesn't want to ask the same exact questions that we're asking the Senate, so they have to come up with more creative, esoteric questions. Be warned, be forewarned. There's always some amount of theater in these appearances. There will be somebody grandstanding. There will be somebody getting their social media quick video clip. There will be somebody that will be asked questions in a rather pissed off, annoyed demeanor. There will be people who will bombard him with like 20 questions in a row. He will not have enough time to answer them, and it'll be good news fodder for the people back home in their districts. So just beware that's what's going to happen. Powell has a real, thread, a needle to thread, a small needle to thread. How about that? He has to convince in his testimony, this is for Congress, but this is widely broadcasted to investors. This is going to be picked up in every financial news media outlet you can imagine for the next couple of days. He's got to thread the needle. That we can slow the economy down, that we're not going to overdo it, that we will be relying on the data. We are looking for signs where we could say we can slow down or stop raising rates. That would be the pause. We'll always look for signs where we could, reduce rates. That would be the pivot. And that's the line, the needle he has to thread. He's got to thread that he is vigilant against inflation. He's got to say that we're going to do it without causing too much harm to labor. But ultimately, when they raise rates, or the Fed raises rates, they raise credit card rates. It raises mortgages, car loans, business loans, all kinds of borrowing. So if it becomes more expensive to borrow, that tamps down demand. Could be a very good thing for cash buyers, of course, because that means you don't have to rely on debt. You don't have to rely on debt approvals, credit line approvals. So if you're a cash buyer, you don't have to worry about the interest rates, but maybe you could get a better deal. In any event, that's what's going on today and tomorrow with the Fed. So very big testimonial time, and the testimony is going to be critical. So that's the first two dates: today, March 7th, tomorrow, March 8th. The next big date, these are the big dates that we're all looking at, is Friday, this coming Friday, March 10th. That's the non-farm payroll figures. That's where we come out with the jobs numbers, the unemployment rate. A surprising thing is that the last 10 months in a row, non-farm payroll has surprised to the upside. It's 10 months in a row. I don't think that has ever happened, which is a testament to the strength of the labor market. And, we are at a record low unemployment rate. We will see. The expectation for Friday is 225,000 new jobs created. Last month's report was a whopper of a number that was 517,000, way, way, way above any expectations, more than double. Is it possible that we could go from 517,000 to 225,000 jobs created? I guess so, but that would be a pretty big drop. But still, the Fed wants to see that number even go down more. They're not trying to be cruel. They're trying to tamp down inflation. And one of the results of tamping down inflation, or causes of tamping down inflation, is reduction in demand, reduction in job openings, reduction in wage growth, reduction in hours per week worked. And all of these things cause the economy to slow down, and it causes prices to ultimately follow suit, going down. And then the next big date is Tuesday, the 14th, is the next CPI reading, Consumer Price Index. That will tell us a lot, so investors will be hanging on to that. And then after that, we have the Fed meeting the 14th and 15th of this month. The 15th and 16th of this month. Okay, the 16th is a Wednesday. It's a 2-day Fed meeting, but I want to focus on the second day, because at 2 o'clock, after the meeting ends on Wednesday the 16th, Around 2:15 is when the Fed announces what it did, whether if it raised rates, kept rates the same. We are all expecting a quarter-point rate increase based on what Fed bank governors have been saying, Fed, Reserve branch presidents have been saying. So we're expecting a quarter-point rate hike. Rates now are about 4.5 to 4 3/4. Target the Fed funds rate will be 4 3/4 to 5. Ultimately, we think we'll get to 5 1/4, 5.5, and then the Fed pauses for a while and sees what's next. So that's the important thing that's going on. We've got a couple of big dates. Thank you so much for listening. We will be right back after these brief messages. You can check us out at clientfirststrategy.com. More about me on moneyinthemorning.info. You're listening to 103.9 FM LI News Radio. We will be right back. Stick around. And we're back. Good morning. You're listening to Money in the Morning with Mitch Goldberg. If you want to take this to a conversation offline, have a one-on-one, check me out, moneyinthemorning.info. That's not .com. It's moneyinthemorning.info. I'd love to hear from you, and we could just chat it up a little bit, and we could talk about the show. And if you have ideas about what you would like to hear me talk about on the show, you can reach out to me. There is a way to reach out to me in that website, and you could also call me or send me an email, moneyinthemorning.info. And I'm Mitch Goldberg. So we just went over the important dates to come up with that we have facing us today and tomorrow, the 7th and 8th of March. Fed head Jerome Powell speaks to Congress. We are all going to look for clues about what he thinks for interest rates, what he's looking at, what he expects, and we're going to dissect his every little word. Then we move along to Friday, March 10th this week is the non-farm payroll figures. That's the big monthly employment report. Big number. We're expecting 225,000 jobs created. We shall see. But the hotter the number, the higher the rate expectations go. Then the following week, we have CPI, Consumer Price Index figures on Tuesday. That's the main inflation gauge that we use, and that is a really important number. And then also Wednesday, the 16th, Fed finishes up a two-day meeting, and around 2:15, the Fed will announce what it has done with interest rates, hold, raise, or cut. We're obviously expecting a raise of a quarter point. I don't think a rate cut for this week is in anybody's mindset. Do not expect that. You will be disappointed. It's a matter of a quarter of a point hike, very slight outside chance of a half a point hike, but we think a quarter point hike. There's a lot of leading indicators that are pointing to a slowing economy, but inflation is still too high. The labor market is still too strong to say that we're going into a recession. I have seen these numbers turn around quickly and change their story, and we're all on guard for that as well. So things could change quickly, and that's why it's important to stay tuned. And I keep my finger on the pulse of the market. Stocks on the move today. Long Island's favorite retailer, Dick's Sporting Goods, comes out with a really big beat on earnings and revenues. They raised guidance. All good. Really good holiday season. Stock is up 6% after market trading. I'm just looking at companies that we would know. Weight Watchers jumped as much as 17% in pre-market. They're acquiring telehealth firm Sequence. I don't know what Sequence is, but they're probably it's probably one of these companies that could give you like a prescription to those new injections that help you lose weight. Like you take these injections. I don't know if you have any friends on these. I have a few friends who've taken it. I've probably met like 10 people on these drugs, and they really do work. They basically, you eat, you get full, and you can't eat anymore because you think you're full. It's really remarkable how they work. Weight loss drugs have a terrible history of causing severe health problems, including heart damage, which is why past weight loss drugs have been pulled from the market. Hopefully these won't cause that same issue. And one lady I know, who's one of my neighbors, said her and her husband were on it, they went off it after they lost the weight, and they gained a lot of the weight back. So you still have to work on you if you not just rely on the drug, as far as I can tell. Okay, so that's that. So Long Island's favorite retailer is up a lot today, and points wise. Where are you, Dick Sporting Goods? Give you a quick quote. It's up $7, $139 and change in the pre-market, which would be a new all-time high for that stock. Okay, so that is that Long Island's favorite retailer. What else do we have? We went over the important dates. Now I want to talk to you, geeking out a little bit more about the S&P 500 and the Dow Jones. Now, you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. I have to say that. But you should know about how these averages work because you follow them every day. This, when people say, how'd the market do? You're talking about the S&P 500 or the Dow, right? That's what you're talking about. When you look at the S&P 500, there's 500 companies in it. There's like 504 or 505 stocks in it because some companies have two classes of shares. So the one company gets counted twice as far as stocks go. For example, Alphabet, and if you didn't know, Google changed its name to Alphabet. Alphabet has two classes of shares, Class A and Class D. So that's two holdings in the S&P 500, even though it's one company. The biggest stock in the S&P 500 by far is Apple at 6% of that index. Microsoft is 5.5% of that index. Amazon is about 2.3%. Used to be bigger, but now it's 2.3%. And Alphabet is about 3.3%. So when you hear about Apple or Microsoft, they have an outsized impact on the S&P 500 because the S&P 500 is a market cap weighted. So the bigger the company, the bigger its weighting is in the S&P 500. So if you added up every stock of every company in the S&P 500 and gave it proportionate to each company, Apple represents 6% of the S&P 500, of the trillions and trillions of dollars of market cap. Microsoft is 5.5%. So when those stocks move, they have an outsized impact on the S&P 500 index. So that's why when these stocks move, you see these big tech stocks moving. You see the Amazons, the Visa, for example, Microsoft. They impact the S&P 500 pretty big. And when tech is hot, when tech is in a really strong bull mode, that's when you see the S&P 500 go up the most. And vice versa, when tech gets weak, that's when you see the S&P 500 go down the most, because technology is about 25-30% weighting in the S&P 500. And by the way, like Netflix and I think and Facebook, they're actually considered communications. So if you add the communication sector, and if you think of that as technology related, it's an even bigger impact on the S&P 500, so maybe 35-40%. All right. Now, if you take a look at the Dow Jones, Apple and Microsoft are also in the Dow Jones Industrial Average. But Apple, out of the 30 stocks, Apple is in the bottom half in terms of how it impacts the Dow Jones. It's number 16 on a scale of 1 being the biggest. United Healthcare, even though it's a smaller company market cap-wise than Apple, it's a bigger company because it's viewed as stock price. So the Dow is stock price weighted. So United Healthcare is $480 a share at yesterday's close. Apple is $153. So $480, bigger than $153. So the $480, the United Healthcare, that has a bigger impact on the Dow. So it's kind of strange that Apple is only this, the bottom half of stocks that impact the Dow Jones Industrial Average. And Microsoft, which is number 2 in the S&P 500 based on market cap, 5.5% of the S&P 500. The Microsoft is number 4 in the Dow Jones, right after McDonald's, which is number 3, because Microsoft is $256 a share. McDonald's is 270. So therefore, McDonald's has a bigger impact right now on that index, the Dow Jones, than Microsoft. So you should just know that these two indexes will generally follow each other. If they have a good year, they'll both generally be up. If they have a down year, if there's a down year in the market, they'll both generally be down. But this is why they don't move exactly together. And because of this, technology has a lower impact on the Dow than the S&P, which is why you see the NASDAQ and the S&P 500 have bigger daily volatility than the Dow. It's just something you should know about the major averages since you follow them every day. I'm Mitch Goldberg. You're listening to Money in the Morning with Mitch Goldberg. We sure hope we educate you and make you a better investor, better at your personal finance. For more about me, moneyinthemorning.info. You're listening to 103.9 FM, LI News Radio. And I cannot wait to speak with you tomorrow. We'll talk about what Powell says today in his Senate testimony before the Senate Banking Committee. Have a great day, everyone.
Securities and investment advisory services are offered through Next Financial Group Incorporated, member FINRA SIPC. Client First Strategy is not an affiliate of Next Financial Group Incorporated. All the views expressed are those of Mitchell Goldberg and Client First Strategy and not those of Next Financial Group Incorporated. The views are general in nature and not intended to be investment advice. Any discussion of individual securities should not be construed as a recommendation or solicitation by our presenters. Next Financial Group Incorporated does not provide tax advice.